All right, we got to do it. We're going to do some stock market work. Not a good day for the stock market. Dow's down 700 points, just about. Bond rates going up. But we have a great crowd here to tell us all about it. First up, Taylor Riggs, then Brian Brenberg and Jackie DeAngelis. They are co-hosts of the Big Money Show right here on Fox Business. It is a fabulous new show. And I went on it and held a puppy. So that was the best stuff.
And that was our best moment.
I hope so. I love dogs. I love puppies. But my puppy was jealous. Taylor, so let's just review the bidding. Existing home sales down 12 straight months. Walmart beat but gave very cautious. Home Depot didn't. They came short of revenues for the first time in 3 or 4 years. And people are getting real nervous about interest rates. You guys can all chime in on those points. Those seems like the big topics. What you think? We head for a big correction here?
Cautious guidance from both of those companies due to profit. Home Depot adding $1 billion to increase wages for their hourly associates. You could argue that's a good thing, but that talks a lot about the wage price spiral that's underway, which is then if you fold that into the bond and the equity markets, what the bond market's realizing. The bond market woke up. The equity market just now actually starting to read what the bond market's been telling us for a few weeks. Closing in above, 388, 390. The last time the 10-year yield was at those levels, the S&P was at a 3,800, not 4,000. So the bond and the equity market are disconnected, which if yields are going up, you would eventually, the math discount cash flow model here to my left, equities would go down.
Professor Brenberg,
she's giving me the discount cash flow model, Larry. How do you like that?
I know, the present discounted value of future cash flows. Okay, how is that? Is that good?
Yes, look at that.
That's impressive.
Would I pass the Don Lemon test? Am I still in my... that's not what we're going to talk about.
Larry, come on.
We're not going to talk about that. Jackie DeAngelis, is this the beginning of a new bear phase? And Larry Summers is once again predicting recession. He just sort of goes up and up. He's a bit like the weather. But he's basically saying the Fed tightening hasn't worked. So that scares the bejesus out of bonds, which in turn is going to affect the discount price on earnings and the stock market.
It hasn't worked. The Fed hasn't been aggressive enough. And so you still see the labor market holding up and you still see housing holding up. And Jerome Powell has told us that both of those need to crack in order for inflation to come.
Really? Housing?
Housing is actually holding up pretty well because inventories are low. So people are still going out there and getting mortgages even though rates are higher. If they were higher than this, it would really, put a doorstop in front of them. So those are two things to watch. This is an administration, Larry, that I think is over its skis, not only economically, but also on foreign policy. When you see a drop like this today, I think it's some of these negative headlines that have been trickling in and coming out of earnings season.
Now, that's a good... Can we just pause there for a second, Brian? That's a very good point. These rumors about China providing military assistance to Russia, and here's Biden beating his breast about how great he is. I mean, I'm not saying it's a war, but it kind of has a bad sound to it. And Jackie's point could have weighed in today.
I think his speech and what's going on there amplified what was going to happen in the markets. I mean, it shouldn't have moved this much. We got weak news on the consumer, which actually equity should like, right? But instead, they went crazy about this. And I think it's a combination of maybe the Fed's going to raise more. But we've got a problem with the Biden administration and the way I think they're unintentionally escalating problems overseas. I hate to see that because if you get a real strong decoupling with China and it's looking more and more like that, it's going to be painful for the economy.
You listen to the rhetoric. It sounds like war footing.
Yeah.
All right. I'm not saying it is. I'm not saying it's a shooting war. I'm not saying American troops. Just kind of sounds like war footing.
Either way, the markets don't like uncertainty.
Don't like
and that's what we're putting out there. You opened the top of the show by talking about what President Biden could have done with deterrence. He was late with his sanctions, and here we are. Now he has to ratchet it up at a time where we're already in it. And now we're getting to the point where it sounds like it's very dangerous. Markets don't like that.
I know. Taylor, back to the bond story. I think bonds have been in denial or, collectively taking drugs about where the Fed, look, the Fed is going to go through 5% like a hot knife through butter. We had, who did we have? A former Reagan Federal Reserve appointee was on the other day, Bob Heller. He said the target rate's going to go to 6%.
Yeah.
Now, I don't know that, but let's say it goes to 5.5%. That wasn't in the market, and I think it's starting to get back into the bond market, which in turn hurts the stock market.
When you think about the terminal rate, which is where the Fed lands and then holds, don't even get me started on cutting, because I think most people would say that that doesn't happen this year anymore. That terminal rate, you could argue 5.5%. Some are even saying maybe 6%. So we're well through what we thought a year ago, which would be 5, and then you get a pause and then maybe start cutting. So I think we're looking at 5.25, 5.5, maybe 6. But again, it's all of the higher rates that then pressure the equity market. And I think to Jackie's point, the Fed is, look, monetary policy lags about 12 to 18 months. We started these rate hikes about 12 months ago. We should start to see more of the impacts of it.
Yes.
And we're not quite, especially when you think about 75. These weren't little 25s that we were doing. These were big 15, 75 basis point hikes all at one time. So I think the market's still waiting for some of that to get through the economy. It takes some time,
People
but
forgot
we're at
about
that moment.
People forgot about that. They were doing instant gratification. And you're right, Milton Friedman, monetary lags are long and variable. Milton was a genius. He was also wonderful to me. Brian Brenberg, another point. I always say profits are the mother's milk of stocks and the lifeblood of the economy. Now, I do think profits are headed for a fall with these monetary lags. But the Bidens want to raise taxes. The Bidens hate business. The Bidens are anti-competitive. The Bidens want to bust all these this woman, whatever her name is, Lina Khan at the Federal Trade Commission. They're going full scale. They want to raise taxes, and they want to punish and penalize business. And that is bad for profits, and that is bad for the stock market.
When is the last time we have seen an administration this anti-supply side? You tell me. Maybe the Obama administration with some of the Obamacare regulations.
This is Bernie Sanders. He looks like Biden, but it's Bernie Sanders.
Yeah, and I think the market is also starting to come to grips with the fact that we've got a no-growth administration. You got to have growth. You got to have productivity growth to get out of inflation. They don't care about it at all.
They don't care about
and if anybody makes a profit, they hate it.
They don't care about growth. They never care. They're 1% plus is fine with them. That's the problem. We have no strength at home. And this is the Reagan axiom. Peace through strength. No strength at home means weakness overseas.
State of the Union, tax and spend.
Yes,
that was the theme that I took away.
Right.
And that's all you need to know about where this is going.
That was the greatest litany of big government regulatory central planning I've ever seen. All right? That was Elizabeth Warren and Bernie Sanders combined into one.
We've spent
I got to get out, but
over $100 billion
that was the most fun I ever
aid.
had. No, I've never heard
That was fun for
a
you?
socialist riff like that. I mean, this good old socialist riff. Let's have the government control everything. And good old Sarah Sanders, it's the difference between normal and crazy.
Right.
Yeah.
Which was it?
Perfectly
Normal
put.
or crazy? I'll give you the last word, one of you.
That was crazy.
There's only one thing you can say. I love that.
Larry, run your show. It was crazy.
Taylor Riggs, Brian Brenberg, Jackie DeAngelis, 1 p.m. Eastern every day. It's called The Big Money Show right here on Fox Business, and it is terrific. All right.